Hello, guys. This is Nikki. You. For some people, this may be a slide that you have seen before. It's actually the Awesome 10X system. All Awesome 10X members have seen this system. And today, yes, it's going to be a free Friday class pick wherein you will learn how we teach our clients how to choose a system that works for them. Today's topic is portfolio construction for beginners. But portfolio construction for beginners or for veterans, whatever you may be, what we could tell you is that this awesome 10x system is something that works. So, how is long term wealth created? The question is, what asset are you building as a result of your actions today? That asset does not have to be financial at first. It could be building that financial mindset, that 10x mindset before you actually invest. It could be an asset wherein you are building relationships, networks. Take note that there's actually a lot of ways to think about assets. In a book of Tina Seelig, she actually discussed to grade school. I'm not sure how young the students were, whether it was grade school or high school, but she was a teacher. And Tina asked her class what they would do with $5. Do you know how they could quintuple or quadruple or make a return on investment with just $5? The winning team actually realized that the best way was not to think of just the money involved, but really your asset was not the $5 in front of you. Why would you limit your asset to be your capital? In this case, if you think about it, I utilize the asset of my brain to use my time, my energy, and my expertise and finding awesome 10x to actually build a business around something that I passionately love, which is to build a community of people to actually invest globally in 10x trends. So that's really about what assets are you building. In terms of assets that you are able to build, you can think of that asset as a pizza pie. So it's just a pizza pie. Let's make it very simple. Let's cut this pizza pie into 25% or just 4 pieces. If this pizza pie were a real financial pizza pie, that means that you'd have cash, 25%. You would have a business, or in this case, in my case, it's going to be an online education business, or you also are an employee, so you have a salary, so you've got cash, you've got the job, so you've got salary or commissions if you're an agent, so businesses, whatever that may be. You also are supposedly going to build your stock portfolio in which your plan is to increase that to 25% of your total pizza pie. So 25, 25, 25. Upon such time that you actually have enough money to purchase from your stock investments a property, there will be a house for you someday. It could be a small studio or a small condominium, whatever it may be. Your goal should be to build that asset eventually such that 25, 25, 25, 25, you have a complete pizza pie. Don't worry about completing a pizza pie at this point in time. I don't mind if you are just building your cash, you're building your skills for your job, for your business. Eventually, you really want to build all these assets of expertise such that I would honestly say that you cannot own an asset immediately. It does take time. So that's something that you have to understand with your pizza pie allocation. But here in Awesome 10X, we do believe that in order for your long term wealth to be created, you have to build it by design. By design means that you should decide your risk of ruin, your risk control. We automate things, we actually integrate it. For most people, when they design their portfolios, they construct their portfolios, they don't actually think about automation and integration. But the reality is, I believe that people can forget waking up. What I mean is, sorry, not about forgetting waking up. Every morning when you wake up, what's your routine? When you wake up, some people, they drink their water. So let me just drink some water. You drink your water. You wash your clothes. Wash your clothes. You wash yourself. You take a bath. You probably brush your teeth, and you change clothes, and that's your daily routine. So that's by design. You're not even thinking about it, aren't you? When you wake up, automatically you just drink your water, you probably exercise. If some of you are very much a health buff, well, other people will just I don't know the routine of other people. What's your morning routine? Either way, I'm pretty sure that it's called routine because you do it daily. Now, with financial discipline, they say that why is it that people aren't disciplined? They always say discipline, discipline, discipline. If people were disciplined, honestly speaking, we wouldn't have sexy bodies and obese bodies to begin with. If people were disciplined, everyone was sexy and then everyone was hot. But the reality is no. People have not been disciplined. And why do you expect that people would be able to discipline themselves in the markets? Henceforth, if you want a long-term wealth creation, we made a design. We made a design such that in order to decide your risk of ruin, automatically, 25% of your money is automatically in cash. It's in the bank. When you open your Interactive Brokers account, the only money, okay, it doesn't mean Interactive Brokers is the only stock market account that you can open. You can open any brokerage firm, but here in Awesome 10X, we globally invest in 10X trends using Interactive Brokers. Take note though that they are not paying me to promote them. I just use them. You can use Schwab, you can use Ameritrade, E-Trade, Robinhood, Webull, whatever it is that you are using. Put 25% of your net worth today into that portfolio for global stocks. Now, you might say that, well, I don't have that money yet. So if your net worth is, say, let's think about it not as a net worth, let's just think about it in an annual year. In a year, if you think that I only have about $2,000 or just 100,000 pesos that I can invest, then that is your starting account. $2,000. Why do you have to allocate that money? Because the other money is just in cash. The other money is your amortization or payment for your rental, for your property, whatever it is. Or you're thinking of a fund for that. It's like, okay, this is like my house funds. This is like my whatever emergency cash funds. And then, of course, you've got that 25% for your job, salary, business that should be able to support your daily living. Okay, so those are by design. And then you've got to decide your risk of ruin. Assuming that your stock market fell 50%, that means if this was 25% your real net asset worth, let's divide that by 2. Let's say the market crashed or you personally fucked up, your 25% became 12.5%, then you should have that 87.5% of your entire portfolio intact. You understand me? Example, so let's assume that you had your allocation 25% into properties, and usually you would, in a normal time, you would, if it wasn't a pandemic, you probably would have a decent, stable rental yield. But maybe this year it's halved, or maybe 70% off, or maybe nothing at all. I don't know. So if your business or your property this year fell, let's say your revenues there fell half or divided by 7, I don't know. At the very least, the beautiful thing about this designing by risk control and ruin, deciding your risk of ruin, is that you have that 25% cash. You will always hear people saying, why do you need to have cash? Because the reality is, here in Awesome 10X, we do believe that if we do not predict rain, we build arks. Just like God told Noah's ark that, actually, I don't even know the reason why there's ARK investment, why they named their investment fund ARK. But this one is a cliche that I learned from Mr. Warren Buffett. Mr. Warren Buffett made this quote. He said that we do not predict the rain, we prepare arks. So me, I do believe in that. Actually, I didn't predict a pandemic. I mean, I saw the news and then, yeah, so I had cash because of by design. By design. So it could have been an earthquake, it could have been a pandemic, it could have been anything else in the world that could ruin my portfolio. But by design, because I have 25% cash, I don't put all my eggs in that stock basket. That decides my risk of ruin. So this is actually told by your people. It's called asset allocation. I know I said a lot, but really that's what it means. You need to automate, you need to integrate this in your life if you ever want to be long-term wealthy. Now, people aren't product of habits, but they're actually a product of environment. Now, you might say, no, people are a product of habits. No. If your entire environment is eating junk food, most likely you're gonna eat junk food. If if even if like even if you tell me that no, I habitually exercise, no, la la la, no, that's not true. Even if you tell me that you are a health buff, if your entire network or your entire surroundings are not health buffs, you will someday stop exercising. Similarly, if you wanted to really gain financial acumen, if your entire environment doesn't believe in global investing, do you think that even if you study all day long, that you could actually benefit? Maybe you can. Honestly, maybe you can. But it depends because, example, I could be alone here, but if I'm studying independently from everyone in the world, I study on Twitter, I study on Facebook, I study on YouTube. The reality is, I changed my environment from a physical world of no idea of global stock investing. I made myself inhabit a world or an environment where great investors exist. And I will tell you, honestly speaking, that I do personally learned a lot listening to great investors around the world. And sometimes I just learn about them on YouTube. Sometimes I learn about them on Twitter. Sometimes I connect to them on Twitter. They could be my age. They could not know me. They could be dead because I could be watching and reading things that are written by dead people. But it's fine because you can learn so many things about people who are alive and people who are dead, depending on how much you want to learn. I want to absorb things even from the past. So it's really about your habits, but also of your environment. So I want my environment to be 10x investing thinkers, so long-term thinkers. Now, design is how you set things up. I set that up. I set up my success to be by design. So if I want to learn more about global stock investing, I learn from global stock investing. It's a setup. If your environment is set up for success, you will have an easier time to succeed. I do believe in that. I do believe that the Awesome 10X Place is a channel wherein we need to encourage you to invest in the long term. We always say invest in decades, not days. We always choose secular winners. We're not just there for flings. We always even call our flings just prostitutes if we have to. Because you have to understand which stocks are you there for a decade or just for a day. And if you understand those secular trends from non-secular trends, it will be easier for you to accept that even if there's volatility, you are there to really see that business become great and greater and greatest. So you need to change your environment to change your mindset. That environment does not have to be a physical environment. We are all virtual. We're here online. So that's it. Just change your environment to be around people who wants to also be long-term wealthy, not just quick, rich schemes. They don't want to just get rich quick. You need to be get rich slowly, but surely, you'll get your long-term wealth. Routinely be with who you are going to be. When I say that, it doesn't mean that you have to hang out with me all the time, although I do appreciate it, if you will. This Awesome 10X channel is an everyday daily channel. So I personally like to learn and learn. So so I say to people that I love learning from Motley Fools. I love learning from the podcast of our Rule Breaker Investing. I do love to listen to so many investors and channels. For some people, that might be not something that they want to do. So like, can you imagine spending 8-10 hours just listening to investing channels? It doesn't, actually, it's not necessarily investing channel. I could be just listening to a certain topic. That's also possible. Let's say let's assume that I'm interested to study gaming. So when I'm studying gaming, I could play games. I could also immerse myself in gaming reviews, gaming community, and so forth. Routinely be with who you are going to be. Invest with discipline, money should follow. A lot of people want to invest their money, but they don't know how to start. We always tell them, do you know that you can invest with just $100, $500, $1,000? They still don't believe us. But yes, you need to invest, even if it's just a small amount of money. And that discipline comes from that 25% allocation. That money shouldn't be something that you will really use for the next 1 year or next 2 years. So it doesn't have to be big, but at least you have to think about that investment for your 10x journey. So this is a 10x journey. We always say it's a decade, so our goal is 10x in 10 years or less. If we could do 10x in 10 years or less, better. Now, this spaghetti is kind of easy to understand, but this spaghetti, I always tell people that there is no perfect sauce. My spaghetti could be just basil, oregano, tomato, and you can have like carbonara, egg, whatever your recipe for your pasta sauce. There is no perfect pasta sauce. However, even if there is no perfect pasta sauce, we give you a guideline. We think that diversification is needed. So in our pasta guideline sauce, if you think of if you think of your pizza pie and your portfolio, inside that pizza pie, you've got your stock portfolio, which is now represented by a spaghetti sauce. Your spaghetti sauce could have 20 ingredients. That is my personal appetite. I personally like 20 ingredients in my pasta sauce. I don't like to have just I don't like to just have 5 ingredients. Consider tomato, let's say, an ingredient. Do I need to put 5% of my pasta with tomato and tomato only? Do I want it 100% tomato, or should I put like tomatoes, basil, oregano, mushrooms, some sausages, some salami, pepperoni to make it work for me? Of course, there's no perfect sauce, but I think the recipe for your spaghetti is we have determined that 20 is good. And I'll explain why. With 20, let's say you equal weight 20. If you allocate 5% each, if one of that 20 was wrong, and you should actually assume that in your pizza pie or your pasta sauce, that you will actually make some mistakes. Can you imagine if all your 20 ingredients was all perfect? You'll probably be in the top 0.1 percentile of the world. So we don't really believe that we are so great. However, we do believe that we are not that bad either. So since we want to be long-term wealthy, our goal is just to outperform the market. If the market is about 25% gain for the year, our goal is to make 50% gain for the year. If we can make 100% gain or 500% gain, then that's better. But we don't really enforce ourselves to make that much. Also, it doesn't mean that we have to the reason why we want to do 20 to 30 names is that one single stock will not make us winners. At the same time, one single stock does not make us losers. If 5% crippled down 30% and we're wrong, negative 1.5% effect on the portfolio. We don't think we suck so much that half of our portfolios, that half of our 20, let's say 10 are mistakes, 10 are great. So nonetheless, also I want to emphasize that, of course, an awesome 10x system means that when we are right, we definitely want our rights to be bigger and bigger and bigger. And so that is also a trick, such that in 20 stocks, we could actually have some weighting, some are 15%, and some 5% can be reduced to 2% when we know that that is a loser. It can even be 0%, such that if we already determine who the winners are, we can just allocate most of that pizza pie or the pasta sauce into that winner. So actually, a while ago when I said 25, 25, 25, 25, if you know for yourself that you can allocate 15% or 20% in your stock portfolio, you can't allocate 25% yet, it's fine. Now, if you're more confident in your business skills, if stocks and your business is one is the same, it's up to you. You can make it 35% or 40%. It really depends on each persona. What should happen or what should have happened is a weak consolation price. So what is happening? Risk management 101. This is just us saying that we don't predict. So I don't really predict. And if ever I will predict that there is rain and sun tomorrow, because it happens every day. You can, if I need to predict something, the market will go down, the market will go up. So I don't really care about predicting what the market will do tomorrow, because our style is not rolling the dice. Investing is not gambling. Investing is not going to a casino. You have to have an edge when you are investing. And us, we believe in the following. Take note, this is a Xiaolong Pao because I do love them some. And you could see that this Xiaolong Pao has so many colors. It has ginger, it has truffle, it has the plain original. What I mean is, if you were to compare diversification, 1, 2, 3, 4, 5, 6, 7, 8, if your portfolio represented one stock or one sector, then you could have 8 sectors. You need to have time and you need to have risk control. The risk control was to make sure that your stock portfolio only has 25% of your net worth. And then your stock, 25% stocks could be divided in 8 Xiaolong Pao or 20 Xiaolong Pao or whatever ingredient you want to put into your portfolio. And of course, lastly, a long-term wealth portfolio needs time. Why do you need time? Because if you want to make a 10x, I assure you, even the best businesses in the world were not created overnight. There is no such thing as an overnight success. There is such a thing as an overnight 20-year success, overnight 10-year success, overnight 5-year success. If you want to call it overnight, I don't mind, but it's not overnight. That overnight success came from 5 years, 3 years, 10 years, months. It's time. So the simple strategy is that we do buy quality with reasonable upside and lower downside. We draw a balance. We actually try to be very simplistic, wherein we diversify. I know that diversification protects wealth because it cushions the downside. However, concentration will build wealth. Too much concentration, however, can magnify losses and gains. We avoid extremes. If I know a company is doing 100 to 200 to 300%, people would ask me, well, shouldn't I not change it from 5% to increase it? We changed the system. Actually, we didn't change. We have it in the system wherein that 5% can grow to 10%, can grow to 15%, meaning you can overweight. Our overweight is 15%. Our underweight is, of course, 0. Our typical weight is 5%. So yes, you can actually concentrate, but concentrate with a balance. You don't want to have extremes. When I say avoid extremes, you don't want to be uber, super duper bullish. Neither do you want to be super duper bearish. So you don't want to be permanently fixated with extremes. So you can't like be, it's so sunny, it's so hot. You have to just draw a balance. Long-term investing does not mean that you're keeping your eyes closed. It is actually tracking while passively holding. You're actively tracking. If the buy decision is correct, selling becomes infrequent. Frequent selling is a poor reflection of our buy decisions. This came from T. Muthak. He is the so-called Indian Warren Buffett, and I follow him on Twitter. I do think that he's a great follow. I like what he said. He said that you shouldn't keep your eyes closed. Some people mistake. There is a myth that when you're doing long-term investing, they think that, okay, I'm going to buy and forget. You need to understand that buying is not a long-term buying has 0 meaning of forgetting that investment. It means that you're buying, you're actively holding, even if you're up 50%, even if you're up 100%, even if you're up 500%. The key to make that 10x move is that you're actively tracking, but you choose to hold. You know, our own students have said that I never knew how hard it was to actually hold a winner until I actually had one. Because every time I have a 20% winner, even if I think that it will grow to 50% or 100% someday, I'm so scared that my 20% gain could suddenly be 10% gain tomorrow. Similarly, what do people do? The habit of people is that when they have a 15% loss or when they have a 10% loss, they secretly hope that that 10% loss could be a 1% loss, trying and trying not to sell a loser. So people are, by nature, they cannot hold their winner and they actually tend to hold their loser. We said that frequent selling is a poor reflection of your buy decision. Let's assume that you bought something at $10, it went to 15, It won at $20. If you're frequently selling, the question is, why are you selling? Are you scared that 15 and 20 goes to 10? Aren't you aren't you happy that your buying decision was correct? If you are selling, it's actually reflective of your poor buy decision when you bought. You had no idea why you bought it. Maybe you were lucky it went up 50% or 100%. You weren't really a real awesome 10x winner. For instance, a powerful way of selecting secular winners is to understand trends. Sometimes it could be a simple statistic like World Championship finals hitting record viewership. So you have to just be aware that this is keeping and growing and growing. You need to understand that gaming community, the secular trend, is just growing and growing. So that is a system that you have to study first. Like I want to study and make money in the secular trend. The video games, the platforms, the cloud, the data, the esports, the payment scheme, everything. You can learn so much. The publishers, or you can also make money on secular trends like a behavior. If more and more people are not drinking alcohol, if more and more people aren't cigarette smoking, if more and more people aren't watching television, in fact, more and more people aren't even having sex, more people though are having a strong likelihood of playing video games. And yeah, so that is the highest spike, video games. So these are statistics between ninth grade, 14 to 15 years old. So your teenagers or teens are actually the youth. The youth is actually quite, their behavior is leaning more into games. So you should understand that, of course, this is an old statistics. I keep updating my understanding of behavior. This is something that I like to share. I always said to people, you always want to buy great businesses, not great valuations. In fact, it's the TINA 2 TAM combination. The 2 means the only one, TOO, the only one. Jerry Garcia said this from the Grateful Dead. He said that you do not merely want to be considered the best of the best. You want to be considered the only one who does what you do. Jerry Garcia, 1942 to 1995. Is it a great business? That's the first question, not the great valuation. It's not about the great valuation. The reality is you want to buy great businesses at cheap valuations. Who doesn't? But if it's a great business, you can afford to buy it. You buy excellence no matter its cost. Buy excellence, sell mediocrity. For instance, if a company, so this is me telling you about my philosophies, Peter Thiel, 0 to 1, 0 and 1. So I do believe that the world has zeros and ones. It's not, I'm not saying that it's a zero sum game. What I only mean is that if you have a great business, it doesn't mean that I have to pay for you at a cheap price. I could pay a premium for you. Why? Even in players, why do we do this? Did you know that the last dance, Michael Jordan got paid 300% higher than everyone in the team during his time? It's normal to pay a premium because he deserves it. There is a championship. There is that drive that you have to pay for somebody who can deliver championships. Similarly, if you think about your portfolio as a basketball team, you have like 20 players in your team. Some will be injured sometimes, but actually some will be rookies, some will be veterans. You want to buy veterans because they've proven their skill. Now, it doesn't mean that you always only have Michael Jordan. Eventually, of course, Michael Jordan got old. He wasn't able to play anymore at the peak of his game. You've got the Kobe Bryants who wasn't that who weren't the goats before, which became the greatest of all time too. Or you were looking at the draft and you were looking at the rookies of that day and you were like saying, okay, I should probably get some Kyrie Irving. I should probably get some Steph Curry in my team. I should probably get the LeBron James. So those types of things. Think about it. If you're not a basketball fan, let me give you another example. You cannot just have a Taylor Swift unless you were buying Taylor Swift when it was like year 2000, year 1990s. Yes, year 2020, her album was off the charts, all-time highs, all-time highs. If Taylor Swift was a stock chart, her market cap would have gone from $1 million to $10, $20 billion. You'd have gone more than 10x. in a 20-year career, you'd have made 100x on Taylor Swift. So that's how you have to think. Yes, you want to buy Taylor Swift, whether it was year 2000, year 2010, year 2020, as long as she continues to deliver growth because she is the only one in her category. Or even if she isn't the only one in her category, she makes it seem as if she's the only one. Example, video conferencing. I'm talking to you sometimes on videos. Not sometimes. I'm talking to you all the time on videos. Would you say that video conferencing is something that only Zoom can do? No, there's Google video conferencing. There's Cisco. There's Facebook. Isn't it that we have like 100 video conferencing in the world? But why is it that people, when they think about video conferencing, can you just Zoom? So that tells you that the company has already acquired the market share of being the only one. At least the theory is that people think that they are the only one. And why do they become the only one? Because they are the top of mind, because they do deliver one of the best businesses and they deliver great scale and people love them. Those are really important. Diversification versus concentration is an authentic system. Life is not black and white. Do not be binary thinkers. Think differently. Yeah, so I think that the market always thinks that it's just zeros and ones. Not really. You can have you can have a creative world. Most people even said that the only way to outperform was to concentrate, and I said no. We can outperform even if we own 40, 50 companies. In fact, diversification is a trait that we actually teach people. They can do diversification, they can do concentration, and just give them styles. There's a lot of ways to make money. There's a lot of ways to skin the cat. We teach people how to invest. You want to trade? It's fine. You can actually do both. But we want you to invest in the best. You want to design a portfolio in names you trust. Example, this is actually an old slide, but do I still believe in NVIDIA, Nintendo, Netflix, Roku? Yes. Yum China, KFC of China? Yes. Square Enix, Disney, Tencent, Huya? Yes. EA? Yes. AT&T is weak right now, but HBO Max, I think it's a dividend play. So yeah, Sony, yes. Kellogg's dividend play. So can you imagine, even if I constructed a portfolio of just 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, is there anything wrong with this portfolio? I'll tell you what's wrong in this portfolio. This portfolio is, in my view, quite concentrated in one big sector. This portfolio is very concentrated on gaming, right? If you look at it, streaming, gaming, but it's not bad, right? Because if you love what you learn and you know, at the end of the day, a portfolio can have 50 companies but still be concentrated. Streaming, games. You want to put the C Limited there. It's better, right? High quality never gets sold. This is just me saying that in an awesome 10x system, you have to understand that a company could reign all the time. This is a 2019 data. We could go to 2018, 2017, 2016, 2020, and the future 5 years. It's still going to be Amazon, Microsoft, Google. When it comes to the cloud, Alibaba could be number 4, number 5. So it can actually increase. I think Alibaba has done so well in the increase in market share of their cloud. Tenets of great companies for long-term investing, you need to always understand total addressable market. They call it total addressable market, TAM, serving as a quick metric of the underlying potential of given opportunity. Let's assume that you're doing businesses. You have to understand, what if I conquer in this niche? How many people do you think would love to do online video conferencing? Zoom thought that maybe there's like 5 million people. Apparently not. There's like 7 billion people in the world. And when in a pandemic, 7 billion people still want to communicate to people. So they vastly underestimated their vast underlying potential of their given opportunity. So, and even if there's like 50, 100 companies, if you have a huge opportunity, it doesn't matter if there's, let's example, fintech, everyone's there. There is your Square, there is your PayPal, there's your Visa, there's your MasterCard, there's your Bitcoin, there's your traditional banks. There's everybody, right? Even your Mercado Libre has Mercado Pago. You've got StoneCo. There's a lot. And then there's Ant Financial, there's WeChat, there's Apple Pay, there's Facebook Pay, there's Razor Pay, there's C Money. The point is, there's Stripe. If everyone has to conduct online exchange, e-commerce is just growing bigger and bigger. How am I gonna pay you? Am I gonna go to the bank or can I just pay through my phone? So all these things tell you about the underlying potential of a given opportunity. We talked about a lot of picks. I should actually give you some of my real picks because I might run out of time. I'm so sorry. So really, when you're doing your 10x system, this is something that I do believe in. You have to always think of Thanos. What does Thanos have to do with your investing criteria? It's called the SNAP test. Yes, that SNAP test came from the Avengers, and that also came from my idol, David Gardner from Motley Fools. Motley Fools said that you have to snap your fingers, and if Thanos snapped his finger and that company was gone tomorrow, would you even notice? If that company you can notice, then that at its core weakness time, you should buy. For instance, this pandemic, a lot of people thought that Disney and Nike and Starbucks and all these restaurants had to, they they were down like 50%, 60%, 70%. Restaurants, airlines, Airbnbs, hospitality industry, everything was being snapped to dust. Snap, 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 die, die, die. But did they really die? No. Some of them actually recovered after 5 months, after 4 months. It just took a longer time, but they did because a lot of people will notice if McDonald's died, if Starbucks died, if Disney died. Rookies and veterans, small wins, okay, you'll learn more. That industry is obsolete with that comes to life. Let us discuss actually what are a review of awesome 10x picks. I have to you today, I have made a slide because people were asking, can they make money just following awesome 10x picks? And the answer there is yes. I'm sorry if I use Excel. I'm actually still very old school. I do believe resume share, new share. I'm gonna show you my Excel. So yes, I am using a 30-year archaic system said by Alteryx. But that's because I'm not using trillions of data. I can't type trillions of data. So even if it's just 50 rows, 100 rows, that's fine. I can still, that's still fine. So of course, we will begin with some of our company picks. If you invested in them, starting May 1 till today, would you have made some money? Now, May 1, 2020, I just checked until May. Like I have April and March and stuff. So let's see. During May 1, I released a video. Every free Friday, we have a class pick. I made an overview. Why do some companies 100-fold? Why do bad stocks make good trades? Because it's so many things. I did during May, gosh, everything was like so cheap. So I discussed all the companies. So there was not one deep dive. I had to discuss everything. But on May 8th, I singled out for you C Limited. I said that it was the Peranakan version of Tencent. And what happened there? Yes, it was a winner. So it was like about $50 that time. And when we released that today, the stock is 170. So you would have made 240% just by simply buying and holding. And actually, if you were listening to our channel, we were saying to just add, not even to sell, not even to just buy and hold, but to add. That is what we mean with long-term investing is not keeping your eyes closed. It's actually actively tracking while passively holding. Passively holding meaning you're buying and holding, but you're actually adding on the way up, given that you are correct. So that was really a great stock pick, and we continue to hold it. We continue hold and we continue to add. Okay. May 15, I talked about who passed the earnings with flying colors. And I said on May 15, that was a free Friday class. Every Friday, I give free classes. Who passed earnings with flying colors? I said Chegg, 5N, 5.9, Beyond Meat, Activision, Electronic Arts, Mercado Libre, Shopify, Square, PayPal, Etsy, Peloton, Twilio, Uber, Net, Moderna, Datadog, Innovio, Novavax, Wix.com, New Relic, Skyworks. And we also said during that class, upcoming releases for earnings that we felt was gonna do all-time highs on earnings or will recover fast. We said Nvidia, Walmart, Zoom Video, JD, Baba, Alibaba, Baidu, Dava, as in Endava, C Limited. So we actually said that. Medical aesthetics, we actually discussed a few things because we were discussing bad stocks making good trades. We actually mentioned Shentra and InMode. I didn't do an analysis of the prices here, but look, all of these were 100%. These were like more than 100%. Because that's a lot, you might say that I didn't understand what you wanted me to buy because it's a lot. The point here is that during that time, May, April, March, the reason why I was doing a lot of, it's not spraying and praying. If you think about it, I said it was like alternative meat. There's like a trend there. Peloton, it was doing so well. It was like understanding who were passing the earnings with flying colors, understanding which were these developments. And yes, actually, I underestimated that from, even if you just bought them on May, yes, you'd have made 200, 300%. So some of us bought them, but not all of us held them all the way till today. So yeah. On May 22, I actually discussed a girl who sparked the CBD movement. That was Charlotte Webb. We bought it at 6 Canadian. A week after, it went 9 and 10. Today, however, if you invested and went long-term on Charlotte Webb, it's just a 3 Canadian. So are we wrong here on a long-term basis? Yep, we are long here. We are wrong. It was initially correct and then it was wrong. However, did we lose money even if we were wrong? Not really, because as we said, from 6, it went to 9 and 10. We sold it at 8. We didn't get back it at 6 or 5 or 4 or 3. So I think Charlotte Web right now is at 3. It is still part of that cannabis sector that we do still believe in fundamentally. But so far, the cannabis sector is a weak sector. Okay, May 29, I discussed the metaverse. I discussed Nintendo and Tencent gaming. At that point in time, Nintendo was 50. Today, Nintendo trades at 70. Tencent traded at 55 then. Today, it's 70. Is it a strong outperformer? It's just fine. It's not like super outperformer, but it's not like super laggard either. So Nintendo went 40%, Tencent went 27%. Okay. June 5, I discussed GAN, Gamble, IGT, Flutter, Cambi. I was discussing bad guys finishing strong. I also discussed actually the business of sports betting. So among this group, some of them went up, some of them went down, some of them went all-time highs. Actually, the one that went all-time highs was Cambi, and IGT did well. Flutter did well. These were outside your America. They were all in abroad. They were in so this was in London. So yeah, it's not traded in New York Stock Exchange. In US, you've got GAN and Gumble. IGT is also in US. Yeah, GAN, Gumble, and IGT, it's there. We traded it successfully. So for online casinos, we actually said that it's a bad guy, meaning it's a reopening play. So you buy it low, you sell it high, etc., etc. So from the beginning, when you watch that class, you would have done. Initially, actually, GAN was a super winner. GAN, we were buying it at 17, 18. It went as high as 26, 28. And then it fell down to about, right now, GAN is trading at 16, 17. But because there was differences already, from June till October, what happened with GAN? GAN lost the business. They didn't, because they were expected to win FanDuel, and they didn't. They were supposed to win that FanDuel Sportsbook tourney, Sportsbook. And they, but however, why is GAN going up and down? It went $20 just recently. We sold again. We bought 16, 17. We sold at 20. In fact, some people, they make 20%, 10%, 15% in all these online casinos. They like buying, selling, such that I wouldn't say that it is, actually we profited quite well in this free Friday class pick. And I hope you did too. It's about 20%, like not outstanding, but the thing is like we were making like 10-20% in out, actually many 20%. Now this one, bears rejoice over a 5% drop, bulls party like 1999, Nasdaq 10,000. This was again a long overview topic I discussed a lot. If you listen to the class, this is what you would have gotten. In June 12, 2020, we discussed the following. I discussed rooting for humanity picks. I said that my best pick for rooting for humanity was scientific games. When the Nasdaq was 10,000, I said that there are two types of companies that you want to own. You want to own structural winners, but you want to also own the rooting for humanity picks. In my rooting for humanity picks, I like casinos, and my specific pick was scientific games. We bought it at about 15. Some of us got it at even at 13. Some of us sold at 20, however, but some of us held. I'm happy to say that some of us held. Scientific Games now trades at 35. So 100% and more. Capri Holdings is now $20. So we said 13, 12 was a buy. It's still up 50%. Disney, we were saying to buy 112. Right now it's trading at 125. Just recently we made a reiterate buy on Disney after they said that they're gonna go focus more on streaming. Starbucks was 72 then. Starbucks now trades at about $90. Not spectacular, but yeah, what do you expect, right? So coffee will lose money still until reopening. Tyson Foods 59 then. Today it's still 59. You've got a lot of people very scared of the COVID. So a lot of people still aren't going to factories for the meat and stuff. So Tyson Foods has still not been well. This was not something that we lost money from though, because this one, Tyson Foods, when we got in at about 59, inside the class, we saw it went 65. And I gave a warning when Tyson Foods, there was some news I forgot that made me sell Tyson Foods without the loss. Nonetheless, I forgot already. But yeah, Tyson was actually eliminated in our Awesome 10X picks. Yeah, we eliminated that. Same for Macy's and Nordstrom. We actually eliminated this at a profit. You'll notice that from June till today, Macy's actually went to as high as $7, $7.50. So we were able to exit that in peace. Nordstrom, we were able to exit that at 19 and 20. So we were able to exit that in peace. And take note, for rooting for humanity picks, we weren't really doing buy and hold here. We were actually buying and sometimes trading it because we know that they were not structural winners. They were cyclical events. And the difference with structural winners, of course, is that this is just easy money. So we always most of us actually just like structural winners. Netflix 420 today trades about 560. Twilio 196, that is today $300, $330. Datadog is now 115. That time it was 70. Zoom is about $500, $530, $540. Shopify is now 1.1. Ocado went 2.9, and then recently it went down to 2.4 because of patent infringement claims, which we gave a buy at about 2.4 below. So actually this hit 2.9. If you were paying attention, you'd have gotten out at about 2.7 or 2.6, not necessarily at 2.9. Or let's say you're out at 2.4, so let's just put it here 2.4. You're still up. You should still hold. Your Etsy right now is trading at $150. The Trade Desk is now $650. Your Nvidia is now $550. Your Tencent is 70. Your JD went as high as 70, 85. So I think right now it's about $80. Pintuoto right now is trading at $80. It went as high as 100. AMD is now trading at $80. Your DocuSign right now is trading at $220. Your Coolern went $40, but I think right now it's still trading at 33. So that is not. But I'll tell you what, with Coolern, we were able to let people know that we were bearish if you were watching our daily market updates and channel. So technically, our mistakes here aren't really mistakes because we were able to get them out safely. So yeah, we were able to exit. And we were able to hold the winners that we wanted. So actually, some of these structural winners we were able to add, such as Nvidia, such as JD, such as Pintuoto, Tencent, Shopify, etc., etc. So that was June 12th. June 19, we discussed the Hong Kong stock pick. That was Razer, Apple of Gaming. We said that it was Apple of Gaming. 138 then. Today it's trading at 2. It's actually traded as high as 218. still holding on. So that's about 50% win. It's not yet a 100% win, but I do believe that we'll hit that 100% next year. So there. Upwork, I think Upwork right now is at 19. Liquidity went as high as 11, so this was a 100% move. Vuzi right now trades at about 460, but this actually traded as high as $5. So this was actually a 100% move. Big tech, yes, we said SoftBank. We like that. How to buy TikTok and Grab at discounts. That was July 10. Today it's about 7,000 yen, 71 yen, also a winner. We said that IBKR and Schwab were good. Actually, the rise of retail brokerage firms, we just said that there was a secular bull, that people had to do investments, whether they're opening accounts in Interactive Brokers or Charles Schwab. We think that it's a long-term secular uptrend. Nonetheless, we actually clarified it's not a 10x, it's more like just dividends. And it's more like maybe it'll make 10%, 20% a year. So actually, I wouldn't even, well, I think like right now, IBKR trades at 51 and Schwab trades at 37. So it really matches my concept that it's just about 10, 15%. It's not like a 100% move. Yeah. YY right now, YY is trading up and down. So YY, it's Chinese live streaming. We like that. We like it, secular trend. But the China volatility, this one we traded all up, down. So 70, 75, 80, we buy. 90, 95, we sell. So it's more like a trade for us. And I think I discussed why we like to trade it. It's Chinese, it's volatile. We do trade that. Facebook, yes, this one is a long-term hold for us. Facebook went 300 back to 266. So yeah, just steady there. Apple, we said at about 125 to 130 that you would sell it, and then but nonetheless, it is still a no-brainer stock pick for easy money. So yeah, so you just have it there. PayPal is trading at $200. Spotify, we like this since 150, but we shared to people that even at 240 was still a buy. Today it's trading at about $260, I think. I'm giving you the numbers from my head. I do look at charts quite every day. Not really charts, but the prices. So yeah, I think Facebook trades at about 266 so far. Disney trades at about 125, just same price. Microsoft trades at about $220. Sony, I think, just traded about 74. I think it went 75, 76, but it's just there. Microsoft did better in the release. Sony PlayStation 5 didn't make people so happy. Nonetheless, we think that these are long-term, no-brainer stock picks. Nintendo is now trading at $70, so that's good. Grow Generation was great. We went in at $12, and it went as high as 22 actually in just 3 days after release since August 14, then went back down. Today it's about 17, 18. So still up like 50%, right? Fitbit and Google. For Google, at that point in time, August 28, I discussed that we like wearables as a trend. Therefore, I discussed Google, the foray of Google on healthcare, specifically the wearables. But in the wearables, we did discuss a little bit that Xiaomi and Samsung was also doing their own wearable trends. So it actually ties in with our view that Vuzi, Copen, all of these mga wearable trends are something that we love. So for this, Fitbit went from 6.4 to 7. The real reason why we bought Fitbit was because we feel that the acquisition of Google on Fitbit is a good thing. And so we are actually positive on Google. I think the price during that time was 1.6. Guys, we bought 1.6, 1.5, 1.4. I'd say that Google today, we're up about 3-4%. So yeah, so because we didn't just buy only at 1.6. But do believe that we think that this one goes long-term up. I think Google right now is trading at 1,550. GameStop, we actually were buying this at about 6.78, 6.7770. Right now, GameStop is at about $14. This is actually one of our biggest hits. But actually, guys, on GameStop, if you were listening to our classes, we were buying that even as low as $4. Some of us $4, $4.70. Before that $6 breakout. And of course, Michael Burry has GameStop since $3.50, $3.30. Palantir is a new direct listing. We got in at 9.5. Today, Palantir trades at about $10, so just there. We like it. You've probably heard that since September 11. We just shared that last month. Last month, we also shared Lemonade. Right now, Lemonade trades at about 63. This one went as high as 70, so good work for Lemonade, still holding. With NVIDIA, we said that even at 485 that we were still willing to buy NVIDIA. Take note that NVIDIA. I like this all the time. I bought it 170, 200, 250, 350, 485. So buy, 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 buy. Similar to RC Limited buys, actually. So yeah, so this was like long-term hold, hold, hold. Right now, it's 550, so we're up again. Rocket, yes, at 22. I think currently it's still trading at 22, so still unchanged. Look, we like that. Just last week, October 19, October 9, if you were listening carefully, I said Smurfit Kappa Group, we like that, 3,000 pounds, but we also like the SPAC Danamer Scientific, LOAK. We bought it at 10.3. Today it's trading at 10.9. This one, Smurfit Kappa Group, hasn't fallen to the 3,000 where we wanted, so not yet filled. I think it's trading still at about 3,000, 3,1. Nonetheless, the reason why on Smurfit Kappa we wanted to discuss bioplastics as a solution for the world. So there. So that's that's what you learned from our free Friday class picks. What can you say? Do we have a good batting average, or is it a bad batting average for you? So let's take a look at our percentage, shall we? Percentage-wise, the only reason why you can't see the 100% wins here is because our big winners this year wasn't in. Not all of our big winners were actually released on the free classes. So we really made a killing on electrics and SPACs and batteries. So BYD, of course, your Tesla, your Roku, some of our biggest hits were not freely given. Nonetheless, it doesn't mean that you can't make money on our free picks. You could see that on the free picks, these are the big wins. Let's calculate. You could see that this one was 90, 75 to 90. So most of it is positive, as you could see. This one was this is not negative because of for IBKR 48 went 51. Yeah. So mostly you could see the average batting rate. So we do make about 40%, 100% the longer you hold. This took time. So the 200% came from May because that was me. If you try to check our ideas on May, you might actually be, actually it's more 100% if you take a look at our May picks. Because naturally, if you bought the market on May, even just May, not necessarily April or July, not necessarily March or April, you'd still make about good killing, like good 100% moves. Wait up, Nonetheless, given this knowledge that you could see that our picks do make money, how should you position right now your portfolio? That's something that we will discuss. In order to create your awesome 10x portfolio, okay, the recent companies that we have chosen, I'll share this to you for your perusal. I'm gonna share to you right now, awesome 10x. Wait, since you know that we do love some, we have the platform Awesome 10x, and we like to share things like this. Resume share. I'm gonna share to you today this. Here. Can you see this? 10x opportunities for 2020 and beyond. Okay, I said that I like a lot of e-commerce. Currently, I'll tell you what, most of the e-commerce names are so high. So even if I like Shopify or C Limited, I believe that at current levels, you don't want to get in now. It's already late. So I'll just give you maybe just 2-3 companies that I am buying. I just bought it last week, this day, last day, like that. I'll share to you a free preview, free Friday class pick. So I'll share you a summary of what we like. We are buying, as of October 15, that was just yesterday, by Xiaopeng Motors, 21 to 22, electric vehicles. By Fastly, if you can buy it at $75 to $60, Edge Computing Networks. It's a big if. It's a big if. If we could buy it at 75, because currently, Fastly is trading at 87. So let's see if we can get in. So Xiaopeng Motors and Fastly put like 3% or 5% in. I did say that I like to put another buy reco on Zoom. at 490 because of the complete domination on its release of Zaps. This is what I mean when I say buy. Sorry, let me share to you that I did say that I like to buy. I like to buy. I like Zoom ever since, but even at 490, I would still continue to buy, even if it goes 410. So yes, the Zaps which was said in Zoomtopia was something that made me encourage me to actually buy. Now, in case you didn't attend our class, we also said that Billy was a direct loser on the Huya Doyu merger. So this is a free stock idea for you. Doyu and Huya are going to merge. I like Doyu, so the buy there is Doyu. Doyu 15 because one Doyu will receive 0.73 Huya shares after the transaction is merged. Yes, recently we also have been adding on our clean energy picks. That means that you could still continue to buy your Canadian Solar 38, your Sun Power 16, your Bloom Energy 21. Actually, Bloom Energy right now, you get a better entry at 19, 18, it's still a buy. So Huya, I think you can buy it even 21, right? 21, 20, 19, as low as you can, sure. YY, if you can get it $75 to $80, yes. Do I think the market is toppish? On October 14, I said I canceled my sell order, but I do admit that the market is high. I said, do I think the market is toppish? Yes. Do I think the market will fall? Maybe, but it won't be deep, just shallow. So you know that we have made some money on a lot of solars. Green Grow Generation, we continue to buy $17.50 below. Sun Power, Sunrun, Canadian Solar, Tilray, we had to sell that. So cannabis was wrong. TrueLeaf, $25 to $28 was correct. So hit and miss when it comes to cannabis. Yeah. Unity, okay, Unity, we said we want to buy it $84 below. If you want to sell your Spotify, your Unity, your Copen, your Maction, I also gave it a sell, but it is just a profit take. I said that, recall that this is just a profit take. It's just to reduce if you have so much. Sell Billy, I said that, trim half. So here's what you learn. Inside our class, you get things like this. Just trim on the way up for Facebook, Google, Microsoft. Before it happened, we said that. Before the stock goes down and before the stock goes up, it actually is always covered by Awesome 10X. So there's more. I would tell you, yes, we have a buy on Ericsson, we have a buy on Nokia. But I think that gives you enough time. We've got buys on Disney, we've got buys on Fiat, aka Skills. You learned a lot from me today. I hope we encourage you to have your Awesome 10X system, have your Awesome 10X life, and construct your portfolio to reflect really what you believe are the biggest opportunities for 2020 and beyond. To me, SPACs are giving so much opportunities. You can check my links. You can check my Faces Trader on Twitter. I shared that SPAC, that Danimer Scientific. This was a free pick last week. Danimer Scientific is a great company. So we bought at 10.3. Today it's trading at 10.9. Whether you buy 5% or 7, I don't know really the allocation you want, but typically 3 to 5% per stock, and get as many trends as possible that are really the strongest in the next 10 years. Whether you are streaming platform, whether you're doing some social media, whether you are doing ERP or just self-driving cars, think about all those trends, and we have a stock pick for you. Thank you for listening, and I hope that you do subscribe to Awesome 10X, our inner circle, so that you could be in our inner circle. You get the environment to make you 10X wealthy. Awesome 10X wealthy. So thank you very much and have a 10X life. Bye-bye. Okay na. May tanong? Walang tanong? Bye-bye.